In this video, we're going to learn about the financial functions. The financial functions are these functions as shown on the screen and include activity, balance, beginning balance, year-to-date, etc. All of these functions return numerical results from the accounting database. We will demonstrate the functions and investigate the parameters to these functions. All financial functions have the same parameter set, so we can explore the functions as a group. Here's a typical financial function, the balance function. If we look at the Excel function arguments wizard, we see the 5 parameters that this function uses, namely a period, items 1, items 2, company, and unit. The argument value for each parameter represents a filter on the domain of all possible values. For example, the items 1 filter has as its domain all possible accounts in the chart of accounts. There are techniques of describing the items 1 filter to include individual accounts, all accounts with certain values in the segments, and account aggregations using rollups. No arguments are required, and some arguments have defaults if not explicitly specified. For example, the period defaults to the current period as described in the Options dialog. The company defaults to the connected company database. The units default to the default currency, i.e. the functional currency in the connected company. There are no specific defaults to items 1 and items 2. If neither arguments are specified, then all charts of accounts are included. Another note that is very important. Every argument in the financial functions is a text string. That is why they are enclosed in double quotes. The Excel arguments wizard is smart enough to place the arguments in double quotes even if you leave them off. Let's supply some argument values and examine the results. The Options dialog shows April of 2017. Let's use the balance function. If you specify no argument values for any of the parameters, the result of the calculation is the balance for April 30th, 2017 for all accounts for the connected company database Mabricam using the default currency of dollars. You can confirm this by using the Drill Down Explorer to show the detail behind this calculated result. A side note, the contents of column F in the spreadsheet are shown for instructional purposes only and show the formula content of column D by using the Excel IFNA function. Now, let's look at the financial functions in more detail. There are 5 parameters for all financial functions. The first parameter is a period, which is a date filter. Arguments for the period parameter are a filter on the detailed journal entries domain using the posting date column. Now, let's look at some typical arguments for the parameters. The first parameter is period. Arguments for the period parameter are a filter on the detailed journal entries domain using the posted date column. A typical argument in the period parameter is the word current, which is the default. You change the value of this argument by changing the year and period in the Options dialog. As we see here, by changing the period to May of 2017, and drilling down to verify the amount. You may also use the argument period number, which references the ordinal period number of the calendar and year in the Options screen. Thus, in our case, where the calendar is a monthly calendar, period 3 will refer to the March period. If we change the calendar to a quarterly calendar, Then period 3 will refer to the dates July 1st through September 30th. You can even reference a calendar specifically in the period parameter. If you use an argument like period 5 of 2017 of weekly, you filter to journal entries from January the 29th through February the 4th of 2017. This allows you to reference 2 or more different calendars on the same financial design. Next, we want to investigate the account filters. These parameters, items 1 and items 2, are twin filters on the chart of accounts. You can use either filter, both filters, or neither filter. Arguments for the items parameters are a filter on the chart of accounts domain using the account code, account segments, or account rollups. One possible argument for a parameter would be a specific account. Here we see that we can filter to a single account by using the argument in items 1 of account equals 000-1312-00-A and drill down to verify the results. Why are there 2 parameters specifying chart of accounts filters? There's no particular reason other than it is sometimes useful to split the chart of accounts filter into 2 separate filters for ease of use and readability. Some customers dedicate the items 2 parameter to the ledger specification exclusively. This makes it efficient to create budget comparative reports since the budget amounts are specified using the budget ledger. Note that the 2 parameters, items 1 and items 2, are logically ANDed together. That is, the result of using both filters is all accounts that meet both filter criteria. If we try a construction such as activity, account equals 000-1312-00-A, comma, account equals 000-1100-00-A, the result will always be 0, since there is no single account that can have both values. If you want to include 2 or more charts of account, you can use roll-ups as described below. We can also use other ways to filter accounts, typically by specifying items from the segmented account code. For example, activity, natural equal 4100, ledger equal A. We can also use groups of accounts as defined in roll-ups to filter these accounts. For example, year to date of category equal 031, ledger equal A. Above, we tried to create the total of 2 accounts using both item parameters and failed. We can do this with a rollup. Here is the rollup. Lines in the rollup are ORed together. This construction will give us the desired results of the period activity in both accounts. Activity of O-ring equal 100. Obviously, this can be extended to many more accounts than just 2 accounts. Here is another example using wildcards to pull in the sales accounts with a wildcard mask on the natural account. Balance of O-ring equal 200. There are additional possibilities. We have only considered using the equal operator. You can also use the following operators in your argument construction. Also, you can construct arguments using the and or logical operators. Here are a couple of examples. Year to date, natural like 41 ? And department greater than 01. Ledger not equal to B. Credit activity, natural like 4 ? And department equal 00 or department equal 02. There is another video that describes the item expression function that makes entering the items 1 and items 2 parameters simpler in certain situations. Next, the company parameter. The company name parameter is optional and defaults to the connected company. Arguments for the company parameter are a filter on the company domain using the companies listed in the navigation pane. If you use the company parameter, the name must be precise with all spaces and punctuation. Normally, the only time you explicitly state the company is when you want to reference financial information from a company other than that which you are currently connected. Here are some examples. In our case, we are currently connected to the Mabricam database, so all the numbers are by default the Mabricam numbers. Here are two different parameter sets to the activity function. Activity, division equal 100, ledger equal A, and activity, division equal 100, ledger equal A, Mabricam. Both constructions lead to the same result since the parameter defaults to the connected company. Note that the Drill Down Explorer has the name of the company at the top of the Drill Down Explorer window. If instead we want the Fabricam data, this is the construction. Year to date, division equal 100, ledger equal A, Fabricam. Now what about Gabricam? Year to date, division equal 100, ledger equal A, Gabricam, space, Inc., period. Note we had to use the exact company name that is in the navigation pane. The parameter is limited to a single company. That is, you cannot use logical operators to include multiple companies with a formula like balance, gl.account equal 000-1100-A, Habricam and Fabricam. This will give an error. Company Habricam and Fabricam not found. If you want to calculate the number for multiple companies, you can use an arithmetic compound statement with a formula construction like balance gl.account equal 000-1100-00-A, Fabricam, plus balance gl.account equal 000-1100-00-A, Habricam. However, note that when you use drill down on this number, you only retrieve the Fabricam detail in the drill down window. This is a limitation of drill down when combining multiple activity functions with an arithmetic operator. And lastly, the unit parameter. The unit parameter in financial functions is used for currency translation purposes. First, observe that each chart of account that represents currency has a functional currency assigned to it. Let's enter the financial function balance using parameters for the natural account 1100 and the A ledger. If you do not specify a parameter for the unit argument, then the result is the numeric amount in the functional currency, in this case 727,918. If we want to see the amount in Canadian dollars, we use the Z-C dollar for the unit parameter. And the translated amount is $993,754.75. Note that the exchange rate is calculated to be 1.3652 Canadian dollars to 1 US dollar. We are reporting on April 30th, 2017. If we look at the conversion table, we see that this is the correct translation multiplier. Now let's look at a fixed asset account in the dataset. All fixed asset accounts in our dataset begin with 15. So we use as parameters to the balance function natural like 15 ? And the A ledger. And then for the reporting currency of Canadian dollars, we add the unit parameter Z-C dollar. Note that the exchange rate we calculate is 1.1045300. Why is this different from what was calculated for the cash account above? We have not changed the date or changed the entries in the exchange rate table. Here's why. There are multiple items that are considered when translating the functional currency to a reporting currency. The items considered are point in time, the exchange rate table identified with the translation method, and the translation method defined for the chart of account, either current, historical, or average. If we look at the accounts in the cash area, the translation method is current, whereas the accounts in the fixed assets are assigned the historical translation method. Why are cash accounts treated differently than fixed asset accounts? Financial standards require that an asset like cash be valued on the date of the financial presentation, in this case April 30th, 2017, whereas fixed asset accounts should be valued at the historical date of purchase. We can see the dates associated with the fixed asset postings are at the year-end 2013 and January of 2014, and the exchange rate was different at that point in time. In a perfect world, a single currency translation, in other words, US dollars to Canadian dollars, would have a daily rate table and all amounts translated using only one table. However, this is not practical or necessary in many situations. Therefore, financial standards allow approximations over different time periods, weekly, monthly, annually, etc. A single currency translation, like US dollars to Canadian dollars, can have more than one associated table based upon these approximations. You also can assign different exchange rate tables to the different translation methods. In our case, historical translation uses exchange rates defined on an annual basis. And if we look at this table, the exchange rate of 1.1045300 is found. And that is what we have calculated on our spreadsheet. If we look at our conversion tables again, we see that there is also another table that is averaging over a monthly period. These tables are normally used with the P&L accounts. Let's look at sales for April of 2017 by analyzing all accounts starting with a 4. If we use the same currency unit as before, Z-C dollar, then we see that the exchange rate is 1.3430 Analyzing the 3 translations we have done, we see there are 3 different effective exchange rates for the same period of time for different groups of accounts in the chart of accounts. This is exemplary of the 3 factors that determine the effective exchange rate: point in time, exchange rate table, and translation method defined for the chart of account. If you are using historical translation, all translations are atomic in relation to date and a posted amount. Let's examine what we mean by atomic. Look at the financial function balance for the natural account 1500 and the A ledger. This is a fixed asset account, so the historical translation method is used. If we use the Z-C dollar unit, we see that the translated amount is $730,323.81, and the rate is 1.1345788. How is this calculated? Using the Drill Down Explorer, we see that there are 2 relevant postings, one in December of 2013 and the other in April 2017. The currency translation will apply the rate from December 2013 to the first amount, and the rate from April 2017 to the other amount as shown in this auxiliary spreadsheet and historical rate table. This is what we mean by saying that historical translation is atomic in relation to date and posted amounts. The translation system is also atomic in relation to charts of account and translation methods. If a financial function calculates an amount that originates with multiple charts of account, this amount is called a composite. It is not typical, but a composite can contain accounts that have different translation methods. Suppose we calculate a balance at the end of April 2017 for the cash accounts and the fixed asset accounts we have seen above. These accounts represent 2 different translation methods. When translated to Canadian, the effective rate is 1.206947. How is this derived? We can extract the postings and through pivot table magic separate the postings for the cash accounts and the fixed asset accounts using the board report rollup. Here are the tables for the current and historical translation methods. The cash accounts are all evaluated as of the report date with a single rate from the current table. But the fixed asset accounts are evaluated from the historical table by date. This auxiliary spreadsheet validates that the calculations are atomic with respect to the accounts with different translation methods. The key takeaway from this exercise is that although in every case we are using the Canadian dollar in the unit argument of the financial function, the effective rate varies depending upon the point in time, the rate tables, and the translation method defined for the chart of accounts involved. Budgets. Now what about translation of budget amounts that are recorded in the functional currency? The default translation method on budget accounts is the same as their actual account counterparts. In most cases, you probably should use the same unit argument to translate the budgets as you do to translate the actual amounts, as we see here for the budgets for the natural account 1100. However, since you have complete control over the unit parameters supplied in the activity financial function, you can create and use any translation table you desire. Here we show a special budget exchange table we have created and assigned to all translation usages: current, historical, average. Now we can look at the same natural account 1100 and report the translated amount using the special budget translation table. The translation rate is as expected for the current method. And if we look at the sales account in the year 2014, we see that the translation amount is using the average from the year 2014. And here is a 4-year grouping of all sales accounts, and the calculated translation amount is using the annual rate for each year, which we verify using the pivot table technique we used before. And since this is just Excel, you have the full power and functionality of Excel. There is no requirement that you use the ActivityHD currency translation system at all. You can set up your own translation table via formulas in Excel and use them. However, using the currency translation tables is preferred, consistent, and satisfies the accounting standards. In conclusion, this has been an overview to the financial functions and associated parameters. You are now prepared to explore formula constructions and options to produce financial statements for your enterprise.